Hi, my name is Lee Dago, and I'm the creator and founder of iwantoberich.com. Today, I'm going to break down complex ideas and technical terms into easy to understand, concepts so that you can apply it in your daily life in investing. Today, I'm going to talk about lessons from the giants, especially Warren Buffett. The reason why I want to talk about Warren Buffett is because he's one of the most successful investors in the investing world, where he does this for a living. And some of his advice, unlike the other investment gurus, are really easy to understand and applicable for retail investors, and it can save you so much pain. It can save you the pain of losing all your savings or the pain of financial losses that can affect your life. If you take this lesson well, it's really going to help you transform your ideas about investing, and it's not difficult to understand. Lesson number one is that when you're making an investment, it's so important to understand what is investing and what is gambling. What is the difference? And it's so easy for a lot of us to get into investing, but in fact, we are going into gambling. It's like a casino. It gives you adrenaline rush. So investing is when you're buying a stock, a business. Look at it this way: if you're buying Costco, or if you're buying Apple, or if you're buying Amazon, you're buying a piece of that company. You are officially a shareholder. And when they have annual general meeting, you get to attend it as a shareholder. You get to vote on matters that they want to do or how they choose their CEO. And even if you just hold one share and you're still the shareholder of this stock, if you buy it directly from New York Stock Exchange or the NASDAQ. So why is this important? Because if you're buying a business, you're not looking to sell Costco the next day or sell Costco to someone else in 2 to 3 years. You're looking for Costco as a business to give you a return. So you're hoping that day in, day out, customers are going there, they're selling products and services that really make a customer happy, and they satisfy their needs, and they're innovative and productive, and they get ahead of the innovation. So that's what you're looking for. You're buying a business not to buy and sell. But if you are buying shares and you're going in with the idea that, for example, recently there is a share called GameStop. If you're thinking that you're going to go in there, buy at a low price and make sure that it goes up by 500%, make a killing, get out. That happens too. You're trading assets. That is another kind of ballgame. That is gambling, and it requires a different level of risk. It requires a different level of courage. It requires a different level of sanity to do that. I don't advise for you to go for that. Most people would lose all their savings gambling on their stock market. What you want to do is that you're buying something that gives you a return year after year. Like a farm, for example. So Warren Buffett gave an example. If he buys a farm, whether or not the next guy is going to pay more money for this farm is going to produce products that can sell in the market and give a return year after year. And 10, 20 years later, it can still give you fresh produce. So that is a farm. The idea is that you're imagining you're buying a tree, you're planting apple trees, and it gives you apple every year. If you tend to that tree well, you water it. But if you are buying, for example, Bitcoin in itself doesn't have any intrinsic value. It's like the US dollar. It doesn't have any intrinsic value. So you're just hoping that the next guy pays higher for what you bought for. So if you bought for $20,000, you're hoping the next guy paid $30,000. And the only reason the next guy is going to pay $30,000 for it is because he thinks that someone else is going to pay him more money than $30,000. So in that case, this is a kind of trading and more or less like gambling. You're just hoping that someone pays more money for something that has no intrinsic value, meaning that by itself it doesn't have any value. Costco or Apple as a company or Amazon, they have assets. They have management team, they have inventories. So they are in itself, if you strip off any other things, they are worth something. They are a business that runs and sells services and products to customers. Bitcoin is not. US dollar is not. So if you're thinking of trading currency, you're thinking of trading cryptocurrency, think again. Is that how you want to say goodbye to your money? It does give you a big ego rush when you say you're so smart and you catch the right trend, you go up there. Good for you. But for many of the investors who are new or even season 1, you might be losing all your money. And it will be very sad and a very devastating event in your financial life. And you might even swear off investing altogether, but in fact this person has gambled on the stock exchange. If you're one of them who have lost all your money in Bitcoin or FTX collapse, I'm sorry that happens to you. Share your story with people so more people can learn about the risks of gambling. And why do I not advise for currency trading? The thing is that currency trading is so simple to enter. Anyone can open an account in 5 minutes, buy some US dollars, buy from Australian dollars. The truth is that so many of us who have practiced economics, who have studied macroeconomics, microeconomics, monetary policy, interest rate, what the Federal Reserve is thinking, what the Chinese government is doing with their monetary policy and interest, what the factories are producing, what is the GDP. Still, a lot of us are not able to predict the market. A lot of us are still unable to put up a framework that would make money. Even hedge fund manager, they couldn't bet on it properly. And if you think that as a newcomer without a lot of knowledge, you can take a course and trade currency, you're gonna end up in a very sorry state. Don't do currency trading. Don't gamble away your money. Don't believe that you can just get all this technical like that. It's not like that. People who have made a lot of money in currency trading will continue to do so. They don't go out there and teach people. People who preach that you could trade currency for a living are treading on dangerous waters. You don't want to be one of them that lost all your money. Invest for the long term. Take up a good company. Look at what Warren Buffett invested in. His investments are publicly available because his company, Berkshire Hathaway, is a public company. He talks about investing for the long term. He has bought companies for 3 years, 5 years, 10 years, 20 years. He buys and sometimes he sells them. He's not very good at picking up technology stocks. His only good stock that he ever picked was IBM. Now he has about 48 to 49% in Apple, but that's because he brought in new blood into his management and they make some analysis that he knew this was good because of 3 things that he looked for. And you can study this, or if you don't want to study this, look at what he's buying and why he bought it. Number 1, he looked for good management, because you can have a very good ship that can go through rough seas. Like Costco is going to survive a recession. The US has the biggest recession, subprime, Lehman Brothers, 9/11. Guess what? People are still going to Costco to buy something. People are still going to Walmart to buy their groceries. It might be very tough. They buy less, they buy cheaper products, but these are businesses, they are always there. These are bread and butter businesses, and this is what Warren Buffett likes to invest in, boring companies. Number 2, he really looks at the asset and the loans and the debt that this company has. So if you were to strip this company bare, pay off all their debt, the money that they owe to other people, how much asset is left? How much money? Are they net positive, meaning they have more money than they owe? You know, every person has a portfolio as well. How much money you have versus what you owe. If you minus all that out, you're going to get what your net worth is. A company is the same. They owe money to suppliers that they bought things for. They owe rent. They owe electricity. If you minus all that out, do they have money left? Or do you think that they have a lot of debt? So Apple has very good net asset ratio because they have a lot of money. And number 3 that Warren Buffett looks for in his investment is cash flow. Every month, are they getting a subscription? Are they getting a membership? So look for these 3 things. Invest and don't gamble. Invest in the long term. Read up, keep reading, keep improving your education. And don't believe in trading assets. You buy and you sell, buy and you sell. Don't believe in trading currency. Don't believe in buying Bitcoin. So then you can have a really good investment strategy. Good luck. And this is Lee Nagel signing off.